At a time when the whole world is going through hardships as a result of the global pandemic COVID-19, all businesses are in financial difficulties and a significant part of them are going bankrupt, giving the economic system a big blow. Apparently, this is not happening with Amazon. The company's shares are growing as a result of increased demand from customers for online products more than ever, and as we all know, Amazon is the best company to take advantage of this situation and to include even more customers in its ecosystem. In recent years, as part of Amazon's growth strategy, the company has been rumored to be taking on the financial services industry. This is not a move of Amazon in the banking system, but in fact, the company is taking the essence of banking and applying it in its own business for its own benefits. From payments, to lending, to insurance, to checking accounts. Amazon is attacking financial services from every angle without applying to be a conventional bank. But Amazon isn't the only company who has pursued this strategy. Conglomerates, like Google and Apple, have also been involved in the financial system, creating partnerships with banks. The reason why these companies take this action and enter into cooperation with banks is to increase the demand for existing products. However, depending on its business model, Amazon sees it in a different light. By applying new financial services, it can increase its market influence and make it easier and efficient to shop on Amazon and also expand into new emerging markets. First of all, these services include effective ways to make the payment easier and faster. Commerce has expanded well beyond the desktop to mobile. On the web, the infamous one-click patent helped boost the company's payments prowess. But the patent expired in 2017 and opened up the market for competitors. To compete, Amazon is investing in new products, financial or otherwise. Amazon has aggressively invested in payments infrastructure and services over the last few years. That's unsurprising, given that the payments experience is so close to Amazon's core e-commerce business. In addition to offering multiple methods of payment at checkout, Amazon has launched its own service. Amazon Pay offers digital wallets for consumers to use at any of Amazon's partner retailers. Whenever a shopper uses Amazon Pay at checkout, Amazon earns a transaction fee. Third-party merchants on Amazon are steadily increasing and driving Amazon's growth, and Amazon understands that more merchants on its site, selling more goods, means more revenue for them. And to get more merchants signed up, Amazon offers more competitive payment processing rates, which Amazon already gets a discount from card networks, given the volume of transactions it can guarantee. Amazon is also streaming payments in store for consumers at its Amazon Go shops, which have a cashierless, just walk out checkout model. Shoppers swipe in using the Amazon Go app, a series of sensors and cameras track what they take off of shelves, and shoppers just walk out and are charged automatically. The company now operates 25 Go stores across the country, and in 2019 Amazon was looking at airports and theaters as a potential Amazon Go partner. Amazon Pay is still a niche payment method despite the company's dominance in US e-commerce. This underscores the difficulty of influencing consumer behavior, especially when it comes to payments. Alongside Amazon Go, Amazon is using large-scale sale events like Prime Day to nudge people to use Amazon Pay. During Prime Day 2019, Amazon offered consumers up to 30% cash back on purchases if they checked out using Amazon Pay. Offering cash back on an even wider variety of retailers could make sales a powerful technique for Amazon to encourage using Pay in the future. In addition to serving Amazon's core customers, payments is an attractive revenue line when thinking about the scope of the payments market. A more recent pillar in Amazon's strategy to increase its wide net is using cash to reach the underbanked market. The Amazon Cash program bridges the gap between online commerce and offline commerce. Currently, consumers in the US can pay cash into over 100,000 cash loading locations like Coinstar machines, CVS, 7-Eleven, or at partners like Western Union and receive an Amazon redemption code, to then shop online. This product expands Amazon's reach to the underbanked, who may not have debit or credit cards to shop online. Amazon hasn't announced how many customers are using Amazon Cash, but it's clear the market opportunity is large. Approximately 6.5% or 8 million U.S. households, composed of 14 million adults and 6 million children, were unbanked in 2017. Also, approximately 24 million U.S. households, composed of 49 million adults and 15 million children, were underbanked in 2017. The international opportunity is large too. For example, 190 million citizens in India are unbanked and just 37% of adults in Mexico have a bank account. Amazon Cash could be an enabler for customer acquisition in markets that have high unbanked populations. The last service that Amazon offers in the finance sector, but not the latest, is lending to small businesses. Amazon Lending is a small business-focused lending operation aimed at helping sellers on its site. The platform was launched in 2011, and in 2018 it partnered with Bank of America to offer loans to small businesses that may have difficulty landing traditional business loans. This is an invitation-only program that gives loans of $1,000 to $750,000, with terms of up to a year. But how does Amazon decide who of their sellers is eligible for this program? Sellers report that some Amazon lending requirements include Amazon selling history, total sales of at least $10,000, customer satisfaction metrics, no serious customer complaints, no copyright infringement complaints, compliance with Amazon listing style guides. It does not require the same information as most lenders, like bank statements, annual revenue or tax returns, and Amazon lending does not check credit. Currently, Amazon is partnering with several banks, including Goldman Sachs, for a new online lending marketplace. The new marketplace shows a list of 3 to 12-month loans for the sellers to choose from, with a maximum loan size of $1 million with an annual interest rate between 12% to 15%. Sellers will have the opportunity to apply for a loan in minutes and get funded. Moving to a marketplace model could help reduce the financial risk for Amazon, as third-party banks make more loans. The annual interest rate of these loans is typically in the double-digit range, which is significantly higher relative to traditional asset-based financing agreements. Perhaps most crucially, these loans can be used only for one purpose: building up or restocking inventory on products sold on Amazon. Traditionally, small businesses can use short-term loans to finance any aspect of their business, be it funding payroll, updating equipment, addressing liquidity issues, and more. But Amazon's lending business makes sellers more reliant on Amazon by ensuring that they spend money on enhancing their product offerings on the platform and not on bolstering their independence as a small business. This indirectly moves more money into Amazon's pocket, since the company earns a substantial cut from every third-party sale on the marketplace. It's hard to claim that Amazon is building the next-generation bank. But it's clear that the company remains very focused on building financial services products that support its core strategic goal: increasing participation in the Amazon ecosystem. Amazon interest in financial products is part of a broader product strategy to increase dependence from its site. For Amazon, that means investing in products that expand the number of merchants and consumers using its platform, and reducing any friction that may slow the sale of goods. In a sense, Amazon is building a bank for itself, and that may be an even more compelling development than the company launching a deposit holding bank. As for the current situation, we can say for sure that Amazon is coping quite well, and has even released a program to deal with COVID-19 pandemic in these difficult times for all of us.